Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are all having a great day. Hey, before I even get started, apologize for the sound today. I'm traveling. I'm on a travel mic, and I'm recording actually from an airport as I'm on my way out to beautiful, sunny Los Angeles. We have a meetup, a traders kind of social gathering this evening, so if you'd like to join us, we'd love to have you. What I keep telling everybody, no pitch, just drinks. Love to have you. So I will leave the link to that in the comment section down below. So I've already recorded this video once, but I hit the delete key by mistake. So some of the lines may already be on here, but I will go over them fairly quickly. It will be a very short video today. So in the S&P, we are seeing a little bit of weakness this morning. The weakness that we're seeing this morning off of our 2 a.m. market, big strong move down there at the European market open. So I think that if you are a bit more aggressive, you've got an opportunity for a potential breakdown off of this little demand. Prices hit it once, we've hit it again. We're kind of basing around in here. So if you want to try a breakdown, I think you may get an opportunity to get a breakdown really below this level, so below that level. A little bit safer of a trade might be to wait for a reversal somewhere up in here at 28.60 by 28.62 half. Now, both of those levels are lower probability because our 4-hour is still strongly in the bullish camp. So be aware of that. These are day trades because our big picture is still strongly in the bullish camp. In the Nasdaq, yesterday we had the Nasdaq breakout, which met a really nice entry. So if you were able to catch that Nasdaq breakout, leave a comment down below. It would be much appreciated. Love to get some likes and comments on the video so people know that humans are actually watching. But we had a really nice move up out of that level. If I go to a 15-minute chart, I will say that we do have a little bit of demand down here, which could be a stalling point for the breakdown in the S&P. So just be aware of that in your S&P levels as you're planning. In crude oil, so in crude, we have a little wick over wick level right here where we could see a bit of a reversal, as well as the 2 a.m. move down. So we're in between those two areas for today. So keep an eye on both of those areas as far as today goes. So right around 59.94 by 60.06, and then 59.06 by 59.20 for potential reversal trades. In gold, so in gold yesterday we had identified this little level right here. This was a limit entry as of yesterday. However, we've switched it to a confirmation style entry since that level did indeed almost get hit, but we did not get an entry, so we've moved it to a confirmation style entry. Let's take a look at our bonds, the Aussie and the Euro and the Canadian dollar. So in our bonds, price continues to move up. We have a little bit of a demand area down below us where I think that we could see a bit of a reversal. Remember that our 4-hour chart is still very strongly in the bullish camp, so keep an eye on that, on those zones. In the Aussie, we see that we could have a potential for a little breakdown right below this area here. It's been tested a couple of times. If you're more conservative, you may want to hold off only because you might want to get below this little lower wick in here. In the euro, so I want to talk about a euro position. So in the euro position, let's look at our lines from yesterday. And yesterday we had a level identified from our live trading room right here. And we believe that price will retrace. So price did indeed retrace into this level, and you look at it and say, oh, well, it failed. Au contraire. It failed, but following our 6-candle rule, if you look at this, 1, 2, 3, 4, 5, 6. At 6 candles, if price hasn't started to move in your direction, we have a rule that we don't take the trade. We actually allow, excuse me, not that we don't take the trade. We close the trade, whether it's for a short profit, small profit, or whether for it is a small loss. We're going to close that trade because if it doesn't move in the way we anticipate it to move, we don't want to stay in it longer than we need to. And that's exactly what happened on that euro trade. So even though the level itself failed, there's no reason to lose money on that position. Okay, by following those rules, even though a level fails, we're not necessarily losing money. And so now I've got a brand new level up here where I could look to go short. Canadian dollar, much the same way. So if I look at the Canadian dollar, we had this level here, which was a confirmation style entry on our previous daily market commentary sessions. This was a confirmation style entry. I remember I said I had recorded the video already once and hit the delete key by mistake. These lines were in here before, so I'm putting them back in. But this one, price came through the level before coming out. So if I go to a 15-minute chart, you'll be able to see that a little bit more clearly. Price came into the level. Remember, it activates halfway, but then the level gets canceled if it goes below the zone before exiting. And so this one, there's really no entry into this position. So that's an example of two levels that didn't meet entry, or that maybe have met entry that didn't cost you any money. So the idea here is, let's say that you took the Canadian dollar trade and the euro trade and yesterday's Nasdaq trade. So essentially, from our daily market commentary, we had three levels yesterday that met entry. Two of them were out at, one of them was out at break even. One of them was invalidated with no entry, and one of them was a breakout for a really nice run. And that's really how we handle trade management. You're going to take losers. You're going to have levels that fail. But in this case, 2 out of the 3 levels failed. But the one that did okay, because the other 2 just following your rules didn't. You shouldn't have suffered any losses following the rules. So hope that makes sense, everybody. And if you have any questions, please send us an email, support@tradersarmy.com. Thanks so much, and I will see you soon. Later.